We think oil's been supported by weather for the most part, right? We've had a cold snap. We've had a strong performance in heating oil, diesel, but also crude oil, which has been rising in sympathy with that. Obviously, OPEC took a measure to extend the cuts in December, which means we have less supplies than the market may have anticipated in the first quarter. We've had Brazil, which is one of the big one of the incremental suppliers of oil from non-OPEC this year, underperforming their own expectations. So there's a number of factors. I still think that oil is likely going to come off into March, and the main reason is we do think that the market is in surplus. We have probably more barrels of oil coming in on the supply side than the market wants to buy, because at the end of the day, we're still in a very frail macro outlook. We're still in a frail industrial outlook here over the course of the next few months.
Okay, so Brent is at $77 a barrel. You do think the market is still oversupplied, despite the support we've seen to prices in recent weeks. Where does that leave your kind of target range?
We probably think Brent kind of rolls down below 70. We're looking for $65 a barrel Brent into the next couple months. And again, I do think there's a winter element to it. Remember, we've had global gas rising as much as $15 per MMBTU, which is close to $90 a barrel. That's kind of roughly in parity with diesel, gas oil, heating oil. And we think that kind of comes to a bit of an end over the course of the next month as refineries go into maintenance. Okay. So we're going to have more of a normal refinery maintenance season this year. Thereafter, it's hard to say. I think. Look, global markets are at the edge of a new administration in the U.S. We could very well see broader risk-off in markets within 10 days. And part of it is there's a lot of uncertainty around what's going to happen. Everyone's talking about tariffs, talking about immigration, talking about tax changes. But nobody really knows, right? I just attend investor dinners and lunches and discussions with different corporations. Nobody really knows what's coming down the pipeline. We have a sense that maybe there's tariffs, but we don't really know what those tariffs are going to be, how they're going to be applied. We know tax changes are coming. Don't really know what those are. So, and I think in the same time we're seeing long-dated yields, long-dated interest rates coming up very quickly in the U.S. with a big steepening of the yield curve. So this is all pointing to a complicated macro outlook in the next month or two.